The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you need to reach out to me, 631-647-4694. When we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors, accountants, attorneys across the United States with insurance matters and insurance needs. As a matter of fact, last week I was hired by a law firm and a forensic CPA to go over a major insurance matter as an insurance consultant. And I'm happy to do that with any law firm that needs fiduciary responsibilities and everything else, and to go over their life insurance programs. And this was a case where someone had really done some things that weren't appropriate. Guy lost a lot of money, and they want my help in assessing damages and knowing my knowledge of companies and product and situations. They were relying on me to work with them to do that. Today, anyhow, hope everyone's enjoying today. I want to talk about basic term life insurance. And the reason I want to talk about it is earlier this week I've had several calls from people. One gentleman who called me, a very large contract, 74 years old, says, I want to convert my term. And his term was no longer convertible. What does that mean, converting your term? Well, basically, he bought a term plan for a lot of money. He's a very high net worth individual. And his term, he knows, is coming to an end in 3 years. He bought 20-year term 17 years ago. And he wants to make it permanent so that his wife, and family have the protection that they need. And his policy was only convertible till age 60. He's now 74. So he's missed his window of converting it, and he's healthy. And now I need, I need a lot of coverage because of estate taxes and for other reasons. And I protect our lifestyle. Mainly because he owns a lot of real estate, and the real estate's not liquid, and he doesn't want to be forced to sell it. I mean, if he passes away, to sell it to pay taxes. So he has a big requirement for need for life insurance. But, people that are in their planning think that they don't need insurance after a certain age. It's really not true. Actually, you need more insurance as you get older for that income protection for the surviving person, and maybe for your own living benefits. Now, this brings me to a topic that I've mentioned before in the past that I'd like to reiterate. If you bought term from, let's say, ReliaStar, which became ING, which became Voya, they really have nothing left to convert to. Or if you have MetLife term policies, in good faith, they had great things to convert to and everything else, and term is like a holding spot for your insurance. It's like it's paying rent for a designated time. So the longer your term, the older it will take you to. The more expensive your rent is. But at the end of the day, it ends at that term. Now, they may extend it a year or two at some ridiculous price. But basically, if you bought 20-year term, at the end of 20 years, that's over. So While we're younger and while maybe we don't have while we have some of our largest need, we might buy a lot of term insurance. I'm not saying term insurance is bad. Term insurance is protection at the very least, but it's not lifelong protection. It does end. So you really have to look, if you've bought term in the last 5 years, look at the convertibility of it to something permanent. And what does it mean to convert it? Well, when you convert a policy, you convert it at the health you were when you bought it. So if I'm 40 years old and I buy a term policy for $1 million and I'm now 45 and maybe I had another kid or I have a business and I want to buy, and I realize that I need permanent insurance at this point, well, I have that feature, if I have it in my policy, to convert it when I was 40, when I was in great health. All of a sudden now, maybe I've got issues. Maybe I've got, high blood pressure, cholesterol, gained some weight. Who knows? Maybe I had colitis or I had a cancer or maybe I had a heart situation. And now all of a sudden, I can't get more coverage. So I want to convert it. So when you hear on TV, on the radio about, I can get this guy cheap insurance for $10 a month. Well, it's term insurance and probably has no convertibility features. Convertibility features are huge in term insurance. So it's like having a policy, like having a car without wheels on it. You'll get the cheapest thing, but you got to look inside. Okay, for 10 years, this is my cheapest opportunity, but what happens in 3 years, 5 years, 6 years? Can I convert it to something? And what can I convert it to? So a lot of term has convertibility features, but if my only choice is to convert it to the most expensive product in the world, then that's not so good. And the worst term to have, and probably what seems like it's the cheapest, is when you get it through work. Now, when you get it through work and you buy some extra coverage, and I advocate for that, definitely, if you can get it and it's easy and it only costs a few dollars, that's all great. But group term, there's two problems with it. One, you leave your job and you have no insurance. Or if you get fired or you quit, then all of a sudden you don't have insurance and maybe you're not healthy to get insurance. So if that's all you're relying on, that's very vulnerable. And then if it has a conversion privilege, it's probably to the most expensive product in the world because they think if you're converting it, that the likelihood is you're going to not be of good health, and that's why you're converting it. So the insurance company wants it to lapse. So here this 70-something-year-old came in this week and said, can't you talk to the company about extending my term? I've had it for 17 years and they didn't tell me my conversion period ended and this and that. And, the rep who sold it to me never told me that and that's a big problem too. People buy insurance and they put it in their drawer and a lot of insurance reps, bad, a lot of them are good, but I'm just saying they don't call the next year to check on you and see how things are. And years go by and you have no communication, and all of a sudden your term expired and you don't even know it, and now you're in a situation where you can't get new insurance and you can't convert it, and now what? So a couple of lessons here. Review what you have, and B, know what you're purchasing. It's very important. Term insurance is a lot of leverage. It's not the best. For lifetime coverage, it doesn't do lifetime coverage. It gives a certain amount of years, whether it's 10 years, 15, 20, or 30 years. Some of them are 40 years. You might think you're covered, but you're really not, and that's something you have to look at. And as a matter of fact, there's been studies out of all the term insurance that's ever been purchased, only 2% pay a death claim. And that's not because they're fraudulent, but most people either let them lapse or they convert them, or change companies at some point. And when they do that, so they don't pay out many claims. So the insurance company is not looking to extend your term further. If so, they're going to make you charge a price and a lot of companies don't want you to convert it, really. They have a conversion privilege, but yeah, you want to convert it, you convert it at the most expensive price we can possibly offer because we know that you're going to need it, and that's why you're converting it. So that's my little conversation about term this morning, and you're here with the Main Street Code for Financial Success, and I'm your host, Neil Himmelstein. If you need to reach out to me, 631-647-4694. That's 631-647-4694, or visit me at themainstreetcode.com. Thank you, and we'll be right back after break. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Again, you need to reach out to me, 631-647-4694. Before the break, we were talking about term insurance and some of the differences, and you have to check the actual policy to see if it's convertible and what it's convertible to. And now I want to switch gears, and I want to talk about disability insurance. For those of you who don't know what disability insurance is known as Paycheck insurance, which is if you get sick or disabled, you can still derive an income if you have disability insurance. It is the hugest thing that people must have for protection. And usually if you have it at work, it's not adequate. So, I got it at work. It's usually not adequate. And if you're self-employed, it's a definite must to have that income replacement. Now, if you're talking to guys that are career reps for a company, and some of them are very good disability carriers, okay, that have great disability policies. Some of them not so good, but at the end of the day, disability insurance is a very personal decision and what to make. One of the big differences from carrier to carrier is something that they don't talk about is what your occupation is. Because disability is priced by occupation class. So, for instance, I had a client that reached out to me this week, and they have an unusual profession. They're a golf pro. So, as a golf pro, and they work at a club, and some carriers look at that person and they rate them as a 1A. Now, what does that mean? That's just a pricing model of how they look at the activities and the likelihood of them being disabled. We're not even talking about their health. We're talking about what they do for a living. Okay, now other carriers looked at him as a 2A, and another carrier looked at him as a 3A. So what does that mean? So if you get the best qualification, you can get the most bang for your buck at the much lower price. So the differences in price are 50%, 75% different from carrier to carrier, just because of this occupation code. So if you're with somebody who's only showing you one carrier because that's who they work for, you're not getting the best value. You could be getting a great company, and it could be a great value, but you're not getting a fair market value of the best coverage for you. So we're independent wholesalers. We represent over 30 different insurance companies, not just life companies, annuity companies, disability companies, long-term care. These are the areas we specialize in. So we don't like to give you a quick quote. What's it going to cost me? My turn. There are so many variables in anything you buy, and you want to have the right product, the right thing that suits you, suits your profession, suits your health. Everything else is involved. So disability coverage, getting back to disability coverage, covers your paycheck. It covers maybe 2/3 of what you make. If you're working for somebody, if you're independent, what a great thing. If you become disabled or can't work, it protects that paycheck. And why I like to say it is, listen, if I had a money machine in my basement and all it did would crank out dollar bills, I always like to tell people, would you oil it? Yeah. Would you maintain it? Yeah. Well, that's what disability is. That is your biggest protection as you go through life. The biggest protection you can have. I'll tell you who great disability clients are because they become disabled. Attorneys, doctors, dentists. I can't tell you how many dentists I know who have back problems when they're 50 years old. Like everyone. I've been to a number of dentists, and they all, at some point, have back problems. Why? They're leaning over and they're doing something. So disability is a real thing. It happens. They can't work because their back's hurting. My father was a veterinarian. He finally had to retire because he had such horrible osteoporosis and his hands and his back. It became physically impossible for him to work. Now, my father, if he was alive today, would be 1917. I haven't figured it out exactly, but 100. I think he'd be 108 this year. I think my mom, if she was alive, would be 100 in September. So that's kind of interesting timing in life. But again, these are things that you don't necessarily prepare for, but you need to protect yourself. Now, there's other types of disability insurance also. And you say, well, how could there be other types of disability? So if I'm an entrepreneur, or if I have a business, let's say I have a bicycle shop or a retail shop, and I have this business, or I'm a doctor and I run a doctor's office. There's another type of disability insurance that's very important. It's called business overhead expense. So if I'm running a business, and my business, let's say, does $1 million a year, but my expenses are $50,000 a month. That includes the lights, the salaries, everything that's involved in that business. This business supplies, all that stuff. Okay, and that costs me $50,000 a month, and I become disabled. And my business stops functioning, okay? Because I'm the key driver of that business. And disability insurance will cover my income, but what's covering my business? Business overhead covers my business. Typically, it's for 2 years. But let's say I get $50,000 a month for 2 years, and I'm so disabled that I need to sell my business. Well, the worst time to sell it is when the business is going down. But if I have that extra $50,000 a month, I can keep that business up and thriving, and then give me 2 years of time to really sell it and move it forward. So it's very critical. Additionally, if you're not showing a lot of income and you're self-employed, and disability insurance is not going to cover you for a lot, but you still have these expenses, this is very inexpensive coverage. If you become disabled, to keep that business going. So business overhead expense is another form of disability insurance. There's even disability insurance that protects your retirement. What do you mean it protects my retirement? If I'm putting in $1,000 a month in a 401k, there's a disability policy says if I become disabled, it costs pennies, by the way, and I can show I'm putting in $1,000 a month, they'll pay that $1,000 a month till I'm 65 years old. If I have that coverage. So my retirement can be protected, my income can be protected, my retirement can be protected, and I can protect the overhead of running my business. These are all great coverages that not a lot of people talk about. And it's very important that you know. And one other use of disability coverage that I urge everyone to consider. I've talked many shows about, does your business have a will? Do you have a buy-sell agreement? A buy-sell agreement says, you know what, I have a partner, and if something happens to that partner, that I can have a fund by buying life insurance to buy out the wife. But what if my partner is away skiing, and he falls off a cliff, and he injures himself, and he's going to come back to work, but he still needs an income, so he needs disability insurance. But I need that income to come into the business to keep the business afloat. Think about that. I need that key person income to keep coming in so that I can assume the duties that he's doing, plus he needs the paycheck. So it's really two different types of disability insurance to cover him when he's out and to cover me because he's out, or myself. So there's a lot to think about when you run a business, and unfortunately, most of us, when we run a business, don't think about a lot of the things. And if it's not brought up to you, you don't understand the need for having the right protection, that's where you can falter. So we try and cover all these areas when you talk to us so that you understand that. And we're going to bring up these things, and they may be pain points for you, but it's better than finding out after something happens. To be prepared and have the funds ready if something happens. And that's what we do. So you've been listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3. If you miss an episode, you can catch me on Spotify, you can catch me on Apple, or you can go to my site, themainstreetcode.com, and check out past episodes, or YouTube. We're there as well. And I look forward to talking to you and helping you with your insurance needs and putting your team together. Once again, have a great afternoon, everyone. Neil Himmelstein, 631-647-4694. Have a great day, everybody.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.